All right, back we go. It is September 24th, Saturday, end of the month, going over the market. Just did NASDAQ SPY. Let's check out the Dow Jones. All right, Dow Jones going back, you can see that COVID high, which was about 29,000 and change, went all the way down to 18,213. And then we rocketed up. All free money. Everyone's getting their stimulus check, $1,200. Companies with zero interest rates, making fake companies, all these EV garbage companies, they're not even real, merger and acquisition companies. A lot of like weird plays. You look some of these companies up, like recent IPOs, and yeah, to me, a lot of them are probably just fraud companies. They're total garbage. They'll never, do anything, turn a profit revenue. And that's what happens with free money. You can start companies like that. I don't know how all that works. New York hedge funds, all that craziness, but yeah, that's what happens. And now this is where we're at. So the high right here, 36,952. No, right here was, I think. Yep, that was it. That candle right here back in January. And you can see all the low points. Put one right here, December. There was a high right here. This one was a little bit lower. Here's one recent. Right there. All right, so lows you can see right here coming down. Let's put another one in right here. You want to make your lines connect as best as possible to form a really strong trend line. So you had the October line, December, these were a little bit above. And then June, look at that low line. Then we have a high line, January, the May, April. It's actually April going into May, sort of end of April. That was, what was this line? That was April 21st. That was a little bit lower. And then here in August. So this is a broadening descending wedge, like all the charts, SPY, NASDAQ. And you can see it really, the width was pretty big here, but it's now expanding. Look at this. Look at the expansion of it. You're getting major moves up and down. And the last move in June/July was a nice counter trend rally, bear market rally. It's about 34,000 plus. Now we're going back down. Had a little bit of rally here in September, 4 candles. Look at this, right back down. The 13 EMA is about 30,854, and we're at 29,590. We're way below here. You could get a little bit of bounce. This is really oversold. They pushed it really hard. It's below the low now of June. The Dow Jones really getting hammered. And you can see right here, it fell below 38.2 retracement level. 50% retracement would be about just below 28,000. And you can see how this is expanding. This could come back to this line, 28,000, less than that, and bounce all the way up to 32. The next one, next rally, that could be near November, December. Christmas rally, we'll see. Weekly chart, going back, you can see 1999, 2000, .com crash. There's your high line now, all the way up to the all-time high. And here's the low 2009. I have a double line here going to the COVID low and a little bit higher. And this is where it's landing. See, this is broadening descending wedge. It really lines up either to the COVID low or just above that. It depends how far this goes. Weekly is going down on stochastics. Let's look at the monthly. This is clear. This is how all the charts are. The COVID high, not the COVID high, excuse me, the all-time high, the .com high. Look at that. There's your all-time trend line. Now here's your all-time low trend line. The 2009 wick on that goes all the way up to the COVID low. And then I have one slightly above the 2016. And then this candle right here, which is just after the COVID low. So that means, if we really just keep falling, 22,000 would be the ultimate bottom, like an overshoot bottom, that'll be incredible. That'll be like, what's that, 14,000 drop? 24,000 seems possible now. So the overshoot low will be 22 to 24. Then 24 to 26 looks like that's within range. That would be a second level possible. And then looking for like 26 to 28,000. But the 28,000 right now, that's easily within reach. So it doesn't look like we're just going to stop right there and that'll be it. Everything's cleared and good, and then we're off to the races again. So that's looking like that's going to easily pass that. So they're the levels right now: 28, 26, 24, 22. That range here, and we'll take it, month by month. Now, stochastics, look at this. It tried to cross over it, nearly touch that red, and look what happened. Still going straight down. 24.53. This is one of the worst drops since the dot-com crash. Financial crisis was worse. So this looks like it's going under 20. Look at this. It hasn't really been below 50 since COVID. Before that, slightly below on stochastics. Yeah, this is really a deep trough. This is looking really bad. And doesn't it all, if you just step back and look at these lines, like we're going towards them lines, and then eventually we'll work our way up. So the quarterly, you can clearly see, look at this, 1998, right up here, 2009. It's very clear on this one. The second line is right here. You can see it with, there it is, the COVID low wick. Now we're coming down on stochastics here. If you draw a line to 2009, and you draw this right here, see that there's all, you can draw a line right here, and if it crosses under that, that's not good either. So it really looks like it's going down in this big back and forth volatility. This wedge is descending, falling wedge. And where are we going to wind up? We're going to wind up 22,000, 24, 26, 28 looks like, it's going to blow past that. That's not hard. That's only 590 points. Or, excuse me, 1,500 points. 1,500 to get to 28,000, and then you're going lower and lower. So I wouldn't see a stop right here, and then that's it. Unless something changes in the Fed or the war in Ukraine, this thing's clear up the supply chain. Let's look at the yearly. You have 3 red candles. You have one 2005. There's a 2008. And look at this candle. This candle beats all of them. That means, as we get further and further in the years, the volatility is getting worse and worse. So we get major, major moves in the market because things, free money, things are exacerbated. Housing, it's just multiplying so fast. And here's your 13 EMA, which is a good point of reference, 23,541. So that's why it could fall below into that range near there. You're so far away from that 13 EMA. See, in 2000, you draw your line, you're pretty far away there. 2008 crash wasn't that far away compared to this. So we're way above at this point. So we'll see what happens if we get a little bit of a bounce next week. Sideways, we come up, or we just keep going further. And we go to 29,028. So look for anywhere, longer term. Now, how long is this going to take for it to go to 22,000, 24? Who knows? Maybe in the next year at this point. We're in a clear bear market. But immediate trend, we have broke this June low. So we'll see what happens next week. Any bounce too. The next bounce in the high, we get a counter market rally, bear market rally. Every time has been lower on the high. Look for, if we get up that high, maybe 33,000, 33.5 would be high, 33, 32.5 in that range. And there you have it. You can see this. You can see that COVID drop, and then we just took off. A few little blips here. We pulled back, but it just went off to the races. And now look at this, back and forth, big swings, big volatility. We're in a volatility move right here. breaking that June low, which is very bad at this point. So that's it. Please subscribe to my Game and Trade Alerts on YouTube. Smash the like button. Check out any links below. I'm using TC2000 charting. I have TikTok. Check that out in the links below. Twitter, Instagram, and StockTwits. That's it. Peace.